Welcome to Impact Farming, where we introduce you to the people and ideas that will have a massive impact on your farming operation. Brought to you by Farm Marketer. Sit down, start the engine, and let's roll with today's show.
Hello, everybody, and welcome back to the Impact Farming Show. Today, we have an amazing guest. We have Darin Nooren here. Darin, how are you?
Good. How are you today, Tracy?
Good. I am excited. We are going to be chatting about fair and equal, transition planning, protecting the farm. So I hope you're ready for this exciting conversation. You in the audience, Darin, are you ready to go?
Yes, always ready.
Perfect. Darin, you are a consultant with your company, Nooren Financial. Why don't you tell our audience a little bit about who you are, what you do, and then maybe in the same breath or after that, I want to ask about your experience with farming and transition planning. So actually, first talk about who you are, what you do, and then we'll dive into that.
Typical Canadian farm kid, grew up on a small dairy farm. As soon as I could walk, I was following Opa around absolutely everywhere. All I ever wanted to do was farm and think about farming, and we weren't big enough for me to stay home and farm. It kind of skipped a generation. Dad didn't really want to farm. He was a tool and die maker in town, so Opa invested in other things other than expanding the dairy and more land base. So by the time us three were old enough, it wasn't really feasible for three boys to stay home and farm. So off to high school, then college, went to school for business, and then a second diploma in finance because I had no idea what I wanted to do with marketing. And during finance, the connection between financial planning and the financial world and farming came together with the price of land and doing it in a tax efficient way in a country such as Canada, as great as it is here. It seems the harder you work and the better off you are, you seem to be paying some significant tax bills. So
yeah. Okay, thank you for sharing. You and I, just so you guys know, we connected through TikTok of all things, and you were watching our episodes where I'm creating content for farmers about transition planning. You end up messaging me saying that you do a similar thing. You work with farmers. And the reason I mention that is because we started a few conversations and you're equally passionate as I am about helping farmers protect the farm, the fair and equal, the transition planning, all the frustrating things that we see in the agriculture world, right? I've gone through it. Anybody in agriculture, Darin, you in the audience, anybody in agriculture knows a horror story of a farm that didn't do transition planning or did it poorly. And that's kind of how we connected. And I think we have a powerful episode. So do you want to, let's chat shop here as grandchildren, children of farmers, whatever the case is. Do you want to share a little bit about what you've seen and kind of those frustrations where you're like, we can do better agriculture in your area of Ontario and with your family experience, if you don't mind sharing?
well, it's all across Canada. The blood, sweat, and tears it takes to start farming and keep a farm going off to the first generation is absolutely incredible. Yeah. You have to be smart at business. You have to be willing to work 365 days a year, take 3 to 5 years of stress at a time that before you have any profit showing sometimes due to weather, markets, whatever is going on. There's so many volatile things between weather and markets and interest rates and everything else going on all at once that you have to be a pretty tough individual. And
Yep.
If a family gets out of farming, the chances of them ever getting back into farming it's almost zero. You would have to win the lottery to start farming again in today's world at a scale where a family can make a good living, where two families make a good living. It's so capital intensive. So if you don't plan for the future and you have to take a step back, the chances of that bloodline and family getting back into agriculture is, I might be able to count a few on one hand, and that would be it out of the hundreds and hundreds of people I know farming.
Yeah. And I think that's kind of, sorry, I hope I didn't cut you off, Darren. That's, I think, where we're both working to try and figure this out, right? On the show, I've really honed in on transition planning because I'm sitting here going, okay, farmers aren't transition planning. And there's this against them and this, and I have my sneaking feelings why. But I'm trying to give the tools, the information for the founders and the second generation to figure this out, because I'm a little bit concerned that if we don't figure it out, these family farms aren't going to continue. And like you said, it's not going to happen again. When that family farm's gone, it's gone, right? So if I don't know if you had more to add there. If so, please go ahead. If not, why do you think farm founders don't plan? Like there's so many that don't plan or talk about it.
Likely afraid to make the wrong decisions
Yeah.
too early of a time to solidify something. And you do not need to solidify something. You are building tools along the way for the ifs and the whens all along the lifeline of the farm and the family. It is not a go sign your life away at age 65 and that's it. It's very much ongoing. I see other people saying that quite often on your show. It is. You can tweak things along the way. You're not just giving away the farm, so to speak, all at once to one kid or two children that want to farm. But at the same time, when they start planning, and you're talking about significant assets going to some of the children that are working on the farm, they know that it's a hornet's nest that they're stirring up within the children. So then if you have 4 kids and then you have two son-in-laws and 2 daughter-in-laws, so now you have 8 people, none of them are happy, and you're basically as a parent responsible for the family unity is how most of them would feel.
Yeah.
And it's a good problem to have. If you have millions of dollars in farmland, like it's one heck of a good problem to have if you say it fast. But the details of going along and actually putting a plan in place with everybody sitting at a boardroom table and getting along in a constructive manner. The farm needs to have a voice as an entity, as an operation. Us being on this planet in 2025 farming, we're just stewards of that farm. We're working for the next generation. We are there to grow the farm and do what's in the best interest of the farm to set it up bigger and better for the next generation so that they can do the exact same thing for the next generation after that. And if you look at it that way, it's a lot easier to visualize going forward as a family. But at the same time, there's where your fair and equal come in, I guess, what we were talking about earlier. So the most efficient manner without tearing the farm apart and putting for sale signs up or having an auction or anything like that would be some really good financial planning so that when the ifs and whens occur, there's tax-free cash to buy out in-laws, pay off debt, buy out off-farm siblings, cover off all of those so that you're not selling half your land base or losing half your land base and then no longer having a relationship with your family, basically, is what seems to happen most of the time.
Yeah.
And it's a shame because that doesn't need to happen.
I know. And both you and I, we've had heated conversations about this. It's like, how can we stop it, right? It doesn't need to happen this way. Yeah. Okay. So fair and equal. I think it's safe to say, I mean, I've kind of tried to bring in the humanness, the psychology of the farm founders. So let's say I'm a farm founder, somebody in the audience is a farm founder. There's always that concern about being replaced. You enjoy what you're doing. You don't want to be kicked to the curb, right? I'll just name it how probably a lot of farmers feel. So there's that. And then, of course, with planning and a proper plan along the way, that doesn't need to be the case. But I think, and I think a lot of people are just starting to name it, like fair and equal's the real issue. And just to touch on that a little bit quicker, in the past, and we've all seen it, in the past when farms weren't worth as much and everybody was so excited to leave, they all went to their big city job, left the kid at home, poor sucker, he's the farmer.
Yeah.
And then the oldest farmer or the oldest son inherited, and variations of that and stereotypical, but let's say that's where we were. So I kind of see it as the pendulum is swung so far over this way because land prices are so high. And now the asset of a farm is so big that the non-farming children are like, wait a minute, that's not fair. That farming Joe gets, or farming Susie gets all the assets. So here we are swinging all this way. And now the conversation is fair and equal. So different problem. And I'm sitting here trying to figure this out because I'm going to ask you a question. And then, of course, we're going to go through this. I look at it. Okay. So, and we'll do a few scenarios in our conversation today, but let's talk about the hard stuff right off the hop here. So there's 4 kids on a family farm. And now we look at what's going on. Mom wants harmony. Dad wants harmony. We have 4 kids. So of course we're going to split that farm in 4. And I'm listening to advisors, watching what's going on. I'm going, wait a minute. Okay. So you split the farm in 4, and let's say you give the assets like 25% to each kid. How is this going to work? And I have a few concerns and I want you to touch on it. But one, you have people that don't care about the farm now as equal owners. To me, that can seem like a conflict of interest with the farm entity and the goals of carrying on. So do you want to touch on that? I'm just trying to name the hard stuff because I think there's a lot of farmers that are like dead scared of this conversation because of this. So go ahead, Darren.
Well, the off-farm children, they're going to care about the farm in the sense that they're going to want their dividend every year. Whatever month of the year that is, they're going to have that marked on their calendar, right?
Right.
And for the farming children, they probably didn't grow up dreaming about working for their siblings that are living in big houses in town with swimming pools because they're quite comfortable and can have a nice office job or teaching job or doctor, whatever they may be. They're doing 100% of the work for 25% each of the reward. I don't see any scenario where that would end well. It's like the story of the little red hen. Like we've been taught that since we were 3 years old that you need to do part of the work to get part of the reward. Yeah, I don't understand. I guess with blinders on, when there's nothing there but farm assets, that's what somebody might suggest to do, is just split it up into 4 pieces, right? Oh, you can rent it back to your brother and sister. Well, if the rent today is 1% of the value of that land, you can sell those farms and pay the tax and buy a nice cottage, a nice boat, live mortgage free, retire at 50, 55, help your kids out with their first houses. There's a lot of value there.
Yeah.
There isn't a lot in renting. That's a small paycheck compared to what the asset's worth. So yeah, so that's one way of doing it. I would never do that. And if I was in that scenario, I would have to really think how much work I'm putting in, why I wouldn't go off on my own and just build from there. Because at the same time, right? So I am farming, say, working for my siblings, and a farm 2 miles up the road comes up for sale, and OPA said, if that ever comes up for sale, buy that. That's a good farm. Well, you want to go ahead and pull the trigger on it, and you get outvoted by your siblings that don't want to borrow any money, don't want to spend any money. They just want to stay in the constant state that they are. Well, you need to be growing. My football coach said, if you're not getting better, you're getting worse because your competition is getting better than you, and so you're falling behind. That's exactly how it is with farming. You need to keep up with the other players in the county, basically, because otherwise you're losing buying power and scales of efficiency. And
Well, and if you don't mind me jumping in, Darren, I can't help like look at human nature. So there's 4 siblings, and then we'll roll into the rest of the stuff we want to talk about. But I just want to have these hard conversations because they're important. And once we do this, it's a decision made. So, okay, there's one farming kid and 3 that aren't farming. I'm just going to say something unpopular here. The 3 farming kids, unless they have an incredible love and desire to keep the family farm intact, unless they're well set up where they don't want the money of the farm, isn't there a huge conflict of interest? And the 3 non-farming kids would be like, listen, Farmer Joe, this farm is worth $5 million and you're giving us a pittance for the farm rent and the dividend. Why don't we sell this farm? To me, those are some of my concerns. I'm like, okay, but it just seems like about 5 to 10 problems waiting to happen if we're just trying to split it equal and keep people that don't care about the farm in the
right,
farm.
even in the best case scenario, all you're doing is deferring the problem 25 years further down the road. Because I do know where there's lots of off-farm siblings that get along with the farming siblings great. They're business partners. They don't tell their siblings how to farm, and they get along just fine because they were there and saw grandpa and grandma work really hard and mom and dad work hard. By the time it gets on to their kids that grew up in town, it's like, well, why are we keeping this? We just inherited this from mom. All she did was rent it to our uncle. We barely knew him, our great uncle, right? Yeah. It's all you're doing is deferring the problem 25 years down the road when you could have just bought them out with tax-free money for fair or equal, pretty close anyway, right around there. And they just go do what they were going to do with the money, whatever their dreams were. Doesn't matter. They're gone. They've got bought out. So the control is back in the operator's hands. So
nice.
Yeah, because they're not going to give those farms back. Like when they're 99.9 years old, they're not going to give those farms back to the farming kids' heirs. Those are gone. Those are going to be liquidated at some point. Yeah. And then there's a bunch of capital gains paid. So there's wealth leaving the family umbrella, you can say, and it's not efficient at all. And then the farming operators, they're basically trying to buy the same farms that their dad just finished paying for 20 years ago, right?
Yeah.
For 5 times the value or whatever it may be by then.
Okay, and
to rebuy the same farm operation is trying to buy the same farms back.
Yeah.
Principal and interest at whatever interest rates the environment has at that time for a way inflated number. It's not a good business model.
And I know I'll have this other conversation, and I want all conversations on this show because we got to figure it out. So then I think before we jump into what we want to talk about, I want to work through this because people are stuck on this. So Farming Joe is one sibling and then the other 3 don't farm. Somebody would say, well, Farmer Joe, buy your siblings out then if you don't want them as partners. But exactly like you just said, now you're rebuying the farm at big interest rates. And what are you paying those non-farming children? You're not paying the market rate, right? I don't think this is going to cash flow. I mean, I'm not the financial expert, but those are kind of things I want to talk about on this show.
Well, where I grew up, if I offered one of my siblings 25,000 an acre and one of the neighbors is going to offer 30,000 an acre, they're not going to take my offer. There's a big difference there, right? Yeah.
Or if you offer them 10,000 an acre because like, heck, right? You want to try and cash flow the thing. They'll be like, well, heck no.
Right.
Okay.
Because OPA paid 500 an acre for it back in the day, right?
Yeah, exactly.
Right.
Yeah. I think these are the hard things, and these are the things I want to be talking about, and I'm trying to get to the bottom of it.
So in that scenario, as soon as you knew who wanted to operate the farm and was right into it and had the love for and the passion for the farm, you would sit down as a family and just say, do you really want the farm or do you want the money? Because you know all of our money is tied up in land and grain bins and quota and equipment.
Yeah.
Well, we want the money. We want to be able to live too, right? We know there's a lot of value there. That's what you're usually going to get. It's usually not that they specifically want 3 farms or 5 farms or 1 farm, whatever it is. It's the money. So then as soon as you know who's going to take over the farm, then sit down with your advisors. Usually it's best in the same meeting. Have everybody in the same room. So you're not trying to recommunicate what meeting you had 2 weeks ago with your other advisor, and put together a plan and a corporate structure and most likely a trust in there to own shares in, and as much insurance as you can buy on the parents, because you're going to need the liquidity to buy out those non-farming children. And then that will allow the farm to remain intact and keep growing as it would have, because you're basically creating a holding company with a bunch of insurance in it that's going to pay out tax-free alongside the farm corporation. So this is going to go down to the farming children, and this is going to go to the non-farming children. And then up above, you would have a trust that's basically a rule book of saying when and where it goes and how. That's a far more detailed meeting that involves accountants and lawyers.
Yeah.
But it doesn't need to, you don't need to be dividing the business up every generation at all. And it's very, very frustrating. And I've seen it happen even in my lifetime so many times. I've seen it on my mom's side of the family. I've seen it on my dad's side of the family. If I drove to London, I had to drive past all the farms that were my mom's side of the family. And if they were still in the family today, that would be one huge number. It could be a pension fund, basically. And if I drove south down the highway to go to St. Thomas, I'd drive right through all the land that my dad's side of the family owned. And that was all left in a trust equally to all the children to hash out on their own. So not to go too far into detail like that, because we'll have some family members obviously watch this, but we'll just say it's not the family anymore, and it's very frustrating. So,
and I think that's a good blanket high level statement, because everybody listening to this, they'll be like, oh yeah, we know that. So Darren, you already rolled right into what we're going to talk about today. And I've been going through these episodes and getting a good feeling going, well, how do we do fair and equal? Has to be a thing now, because there's obviously litigation that's happening, people suing the farming child to get their share. So it's not a conversation we can ignore. So to me, I'm like, how do we make this happen? If the farm founders don't have big farm assets that are not farming to give to the children, blah, 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 we need to work with insurance. And to be honest, Darren, I've said this to you already, and I say it to everybody. Insurance and insurance people, I think, scare people, right? Because sorry, Darren, you don't look scary, but I'll just be vulnerable and frank. I mean,
yeah.
I've sold stuff, but I think insurance is one of those things people don't like talking about. It's scary, it's uncomfortable. So I'm sitting here behind the scenes going, how do we make this transition planning work to save the family farm? And I'm like, I think it's insurance. So now I'm bringing on the guests to talk about this. I'm learning with you guys in the audience. So Darren, talk about that. You've touched on it. I see insurance as one of the ways you have to go if you want to do fair and equal and make the farm survive, keep the farm surviving. Do you believe that to be true?
100%. If there was a better way, I didn't grow up as a little boy dreaming about selling life insurance to successful farm families. I never once thought growing up that I would get into finance. It was almost a necessity of what I was watching going on around me in the farming community, where people that were your idols growing up, and there's 10, 20, 30, 50 for sale signs go up, and it's just one big sad story. There had to be a better way. Had to be. So insurance is basically the only thing that you can turn a small amount of money into a very large amount of tax-free money. Yeah. And sometimes if it's set up properly in a very efficient manner, it costs almost nothing and sometimes nothing. You might be cash further ahead over 30, 40 years in a lot of cases, actually, where you can actually draw money out against the insurance more than you've ever put into it and use it for retirement or paying down farm debt or making payments to off farm siblings while your parents are still alive. Like there's a lot of this you can way. It's whole life insurance with under a tax-free umbrella. So you can use the set however you wish, basically.
Let's 101 this. Here's the challenge. Let's 101 the concept, but with enough detail that we can understand, but not so much detail that we just get overwhelmed, because I think that's one of the things, I'll admit it, with insurance. It's like, oh my gosh, if you start getting into the nitty gritty. So the whole concept here is the farm founders, and I know we have scenarios, but high level, the farm founders take a policy out. Let's say I'm farm founder, mom and dad.
Yep.
We take a life insurance policy out. I want one of my farming kids, whoever that is, to take over the farm and the farming assets. But I also want the rest of my kids to get something. So I take out life insurance. So do you want to take it from there and kind of explain, because there's also, like you said, this type of policy, you can borrow against it. Do you want to explain?
Right. So then we would meet in that case and we would go through all the numbers and the options of how to come up with a very large tax-free number for your off-farm kids. And you would say, you know what, this is a really great idea, but I don't want to pay that amount for insurance. I need that operating capital in the farm.
Right.
That at 99% of the time is pretty much exactly what I hear back.
Right.
So very few people can go out and pay cash for a farm. What do? They finance it. So we started financing life insurance premium with the cash value being the collateral for the loan. The lenders know that the insurance is going to pay out one day. So the loan is paid off when the insured person passes away. You're not even making principal payments on this.
Okay.
And the insurance and the loan against the cash value is sitting over here in a holding company, separate from the farm assets, with the loan requirement only being the collateral of the policy. And often you can even capitalize the interest against the growth of the cash value. Most of the time for the loan for the insurance, we don't even need operating company guarantees or personal guarantees. So technically, if you don't want your operating company lender to know about what you're doing over here for your off-farm kids, unless you tell them, there's no way they would know. There is no personal or corporate guarantees. It's a separate entity set up for a completely separate reason.
And the money's not coming out of the bank, correct?
It could be. It doesn't have to be though.
Okay.
There is options where it can be, the insurance can be funded directly to the insurance company by the lender on the client's behalf. So they're basically sending the money directly to the insurance company to fund the premium or the majority of the premium. So the client's not in the infancy of the strategy, isn't even writing a check. At least it gets the policy growing.
Okay. Or the farmer's paying the policy every year.
Or the farmer's paying the policy out of the operating line or out of operating cash or however they wish to do so. But then, but then once that payment's made and get to the policy, then we can lend back the cash value a week or 2 weeks later so that they have the operating cash back in the farm to go make their annual principal payment, to go buy $1 million worth of fertilizer, to go buy a new combine, whatever they were going to do with that money prior.
And then it just comes off the value of the insurance policy.
Right. It just comes off the total net paid out on death of the policy. So like we could get into some like mega.
I know.
And everything. Yeah.
I'm saying Darren 101 it, and I want all the details.
Yeah. And then there's a bunch of tax deductions that go through it to make it really efficient, and then tax credits later on. But that's we could talk about that for 6 hours.
Yeah. Really, for me, I want to share this idea and bring it up high level. And of course, we need to meet with somebody and check into it and figure it out and be comfortable. But that's the thing, right? Insurance, who likes dealing with it? It's like getting a will done. It's like, okay, let's not talk about it. Or like you said, the farmer will say, okay, well, I'm just picking a number out of the hat. Darren, this is not holding you or me to anything, but that 10,000 a year, oh, I just need that. Like I can't spare anything. Like the farm is going, I can't put any money out. So farmers always avoid this. But at the end of the day, you're avoiding a strategy that can help you make sure that you can do fair and equal and keep the farm going. Right?
And the longer you put it off, the more inefficient it gets. Twofold. As the older parents get, the less insurance you can buy on them.
Right.
And at the same time, the farm values are increasing.
Right.
So it's kind of like you're buying this amount of insurance while the farmland is continually growing. So
Right.
yeah.
Yeah, I know. It's fine.
It's like planting a tree. The best time to do it was 20 years ago.
But human nature, right? It's like, yeah, let's not. But that's why I'm bringing it up, because if we actually care about our farms, we need to be planning the whole, okay, I'm just going to put it off and then let everybody deal with it when I'm dead. If you actually care about your farm, continuing on, that's just not a viable option. We have a few scenarios to go through. Do you want to go through those right away and walk us through how insurance can help in these scenarios?
Sure. Hit me with a scenario.
Okay, so we have two farm brothers. They take over the dad's grain farm. They grow the farm, it gets really big. Fast forward, each of the brothers have 3 kids. Now, okay, it's not just the 2 brothers, it's 3 and 3 kids. Now talk about those issues and where insurance can come in and help make this happen.
Right. So first of all, at the high level, you need a strong buy-sell agreement, contractually and financially through either debt notes between each other and life insurance or however you want to do it. Because if something happens to one of the brothers, you're going to need a lot of cash because the widowed spouse might not want to be a farmer. They might just want to liquidate and move to town. Right? Which happens.
Of course.
And I've seen it happen, and it's a sad story. 100 years of work, very successful. Half of it leaves like that.
Right. And that's logical. Why, unless she loves the farm and was farming with them, no, she's going to want to move on, right?
Gone. Yeah.
Okay, so you're saying an insurance policy against the
on each other, sure. And then also they need structure so that the children below them are going to be taken care of.
Okay.
And yeah, it does get more complicated when now you're farming with cousins.
Yeah.
Like it's starting to get the blood's getting thinner and thinner. So you're farming with your cousins and their spouses, because there's always spouses too.
Right.
Like every night when they go home, they hear a second opinion, whether they like it or not. and that's both men and women. So
right.
Yeah.
Okay. So in that situation would be having insurance policy against, that makes sense.
So in that case, once the kids were old enough, you'd probably want the insurance for the kids to just buy mom out, because if mom's 60 years old, say, what's mom going to do? Wait around and live off the bare minimum from the farm? No, she's probably going to want to go live the rest of her life out and enjoy her retirement. And then at that point, she has cash, and the kids just keep the farm going, and hopefully they get along with the uncle good enough that he can kind of mentor them along. And work, whether they divide at that point and kind of, you take this farm, I'll take that farm, and split it up, or that can get a little messy too when you're deciding which tractor is going which direction and which farm. But
yeah.
And
this is unfortunately the way it happens, right? And that's just natural.
Right. But at least at that point, you're negotiating with cash in your hand.
Yeah.
right? You're in a good financial place to make those decisions and to negotiate hopefully the amicable
Wow. Yeah.
ways they go, right? You get a lot of personalities when you start going from grandpa to brothers to now siblings plus their cousins and their siblings. And it happens.
Oh, doesn't it? We all know.
Oh,
Don't we
and
know?
then that generation starts having kids. It's like
Oh my
there's three
goodness.
levels all involved in one enterprise or two enterprises. It's it's probably a good idea to split down the branches at certain points as strategically as you can.
Well, I'm still hung up, Darren. I'm slow. Give me a second here. I'm still hung up on the brothers. One brother passes away. So if there's no insurance policy, duh, what's going to happen is farm assets need to be sold to pay the wife out. That's going to carry on, right? And there goes the farm. And
Yeah,
chances are, I'm going to assume that farm needs all those assets to flow. So now
yeah.
the one remaining brother is literally up the creek. Is that fair to say?
That's a very polite way of putting it. Yes, like
I
you're
work on my wording.
yeah. Yeah, I've seen that happen before, and it's not good. It's a lawyer's dream, like
Yeah,
the ambulance chasing a lawyer. But yeah,
don't we all know? Okay.
yeah,
Are you ready for the next one?
yes,
Okay. Family, 5, 2 parents, 3 kids. One kid is the farmer, the other 2 have no interest, and of course just want the inheritance, right? Because there's a big old
right.
lofty farm there. How can we just speak to that? I think that this is
That's
so relevant.
that's like the most common scenario
Yeah.
is the one really loves farming and the other two just have interests elsewhere and have built their own lives. So in that case, you would just the farm company would create another holding company, put as much insurance on the parents as you can, pretty much, just so that you have tax-free cash to go to those non-farming children and redeem those shares and keep on farming and everybody gets along. That would be there's nothing to fight about then. What's there to fight about? You got your money. I didn't leave you with a tax liability. You got your money. And we still get together at Thanksgiving and Christmas, hopefully, and our kids are still all friends. So
Yeah.
yeah,
Farm kid keeps on farming, gets the farm, and the non-farm children, the
right,
parents had a big life insurance policy and
right,
they get that.
right. So in that scenario where it could be difficult is if those parents waited till they're 85 years old to do anything about it, and then their insurance is not an option at that point. At that point, you're throwing darts at the wall, hoping that somebody works it out. But that's in that case, you're probably renting ground off of each other, which I wouldn't want to do. I don't like renting ground to begin with, let alone off a family member. So
Those are fair comments. I like, you know what? I like having the popular conversations and the unpopular because as we know, working with family is not necessarily easy, right? And I
well,
don't
this
think I do the audience any service sitting here going, oh, it's going to be beautiful. Let's talk about reality. We've seen all the, should I say,
I
Jerry Springer situations. And of course, we're focused on the bad. There's farms that pull it off, but here we are.
I've seen it, and I'm a farmer that helps families with life insurance. I'm not an insurance guy that farms. That's not how I look at it at all. I know how difficult it is to farm at scale and keep the wheels moving and
Yeah.
make it happen. And you let that slip for one generation, it won't happen again. And it is the best life you could possibly have when things are going good and
Isn't
you're
it?
working for yourself. It is the best life you can have. I
I
can't
know.
think of anything else in the world I would rather do.
That's why I'm so stinking passionate about this and really honing in on transition because if we do it wrong, and here's the urgency and where I feel it, if we do it wrong, we end it, right? If we don't transition plan, we end it and it's not coming back. And there's enough things against family farms with Mother Nature, the markets, everything that we don't need to be putting the oh, that's a terrible analogy. We don't need to put the nails in our own coffin.
Well,
Sorry.
it realistically, the decisions you make today are echoing across generations,
Isn't
right?
it? Yeah.
Everybody's great great grandfather was a farmer at one point. Everybody,
Yes.
right?
Yeah.
I've never bought a farm where there was a good succession plan ever.
Truth.
It's always because it was either too much work and the kids at 18 left and went to town, or they needed cash to split up.
Yeah.
I've never bought a farm in a good growing scenario. We'll put it that way.
In a happy family farm.
But I see
Well,
it in the farm show, I can really sum. Yeah.
oh, you just cut out there. Sorry. Okay, you're back. Well, and you know what? That's a very powerful way to say it, what you just said. Nobody's ever bought farmland from a farm that's successfully transition planned. Is that a good
Yeah,
way to
once in a while, maybe they want to trade one, or they found two better, so they sell off one to somebody closer, but usually it's because there's no succession planning.
Yeah. And
And
Darren, here's even, protecting the farm. You love farming. I love farming. People in our audience love farming, and we need to keep these family farms going, right? But also, what concerns me, and it's not just the farming asset, we look at when people don't know about their options to plan, don't make a plan, what it does to the family. And that's what kills me, honestly, because you have beautiful, you've seen it, I've seen it, everybody's seen it. You have a beautiful family, and then farm founders, and I hate talking like this, but we have to. It seems like entitlement. It's like the kids want it, and neither here nor there, but it's a thing that needs to happen. It's going to be passed on. And if farm founders don't know what to do and or don't do it and don't have the conversations, it kills family, right?
that's exactly what you said there. It's going to be passed on,
It will.
whether you like it or not. So why would you not want to dictate how and when it gets passed on?
Yeah.
Right?
Yeah.
It's going to get passed on. Well, even if you don't have a will, it's going to get passed on. So why wouldn't you be strategic as you can and as efficient as you can, and do the best interest of the family as a whole, but at the same time keep the farm together if that's your wish. Sometimes there isn't. Sometimes if development is encroaching and it's just a crazy big number and nobody really loves farming, then whatever, sell it, pay some taxes, and go live it on. But that, I would argue that family net worth would diminish over the next couple generations, because farmland in a way keeps you very structured and disciplined in the way you manage money. It's like it's like a guaranteed savings the way it's structured, and you're buying more land. It's not there liquid for you to buy silly things with, like when it's sitting in a bank, right?
Isn't that the truth? That family wealth, and if, okay, that situation, we're just having all the conversations, big piece of land somewhere in Ontario, development land's coming in, it's too big. Farm founder says, okay, none of you guys like farming. We're just going to sell this all, split it all up. That's the thing that happens. Then you give good chunks of money, which is a blessing to those children and goes to grandchildren. But very quickly, probably that wealth goes to nothing. And then that family wealth bubble just.
Right. So even in that scenario, insurance would be very, very strategic. You sell land for crazy numbers because development's coming in, whatever. The money's sitting in the company. You need to get that money out of the company eventually someday. Well, if you just draw it out, you're going to be paying half of it in income tax. If you put it on insurance on the parents, you can pay that out tax-free when they're gone using the capital dividend account credit. Okay. So you're saving 50 cents on the dollar. So your real 100 million in that company is 100 million instead of paying 50% on it, and you only get 50 million. So that's very powerful for the tax planning too. It's not just when you need a crazy amount of liquidity.
Okay. I'm glad I brought that bonus scenario up. So Yeah.
That's the only way to get a ton of wealth out of a corporation really is through life insurance. There's two other ways, but that's from selling a capital asset, and then the base amount would be a credit to the capital dividend account, or you get a capital dividend account basically passed over from a related corporation. But for that corporation to get that, it was either through life insurance or selling a capital asset anyway. So really, that's the only way to wash wealth out of a corporate structure.
Okay. Okay. Good to know. Okay. That was a bonus one. So let's go to our new scenario number 4. Same family that has those 3 kids, but this time, let's say all 3 kids want to farm. They all love it.
Perfect. That's my kind of family. That's
Good.
perfect.
Let's
That's
do
like
this.
that's
How
a
does
dream
ins-
meeting.
What was that?
That's a dream meeting. Everybody's
Wouldn't
getting along. They all want to grow. It's like, which farm are we going to buy next?
Okay.
That's usually how that goes. And in that case, it's you want to do a lot of tax planning with insurance on the parents, just because you know that when they pass, that you can add a lot of corporate efficiency back to what we just said about taking money out of the corporation without paying 50 cents on the dollar. And some more on top of that, so you have enough insurance to wash the debt off the slate every generation with tax-free dollars if you can. Imagine if every generation you were just resetting back to zero your debt, and then grow, reset back to zero. That's a very efficient way, and you could do that with, you could use $2 or $4 million to pay off $30 or $40 million worth of debt in that scenario quite easily. So it's very efficient. Instead of making the money, paying the income tax corporately, and then making the principal payment. So it's way more efficient. And then for the next generation, the 3 farming siblings, you want a ton of insurance on each one of them as well, an appropriate amount, because if something were to happen to one of them, you want to offer the spouse a check so that you're not in business with your in-law, with your sibling not around anymore. I don't think that would go well long term anyway. Even if you were good with each other.
Yeah. I mean, they probably want to move on, and
Right.
bad memories, and
Right.
yeah, that's just a can of worms, right? Even
Right.
if, like you said, everybody got along. Okay, that makes
Yeah.
sense. So, final thoughts. I mean, I want to ask you if someone, okay, here's the thing, Darren. Our grandparents did or didn't do this. We're sitting here, and then there's a generation maybe that has ownership. Everybody's farm is different. Is there, of course, like my generation, we need to be planning. If there's a boomer generation, I guess it would be here. Is it ever at a point where somebody's too old to start trying to fix the situation?
Yeah, if you're in your 80s, for sure. But you can do a lot of tax planning up until age 80, and we will pro bono give advice of what we would do in your scenario after that, and help as much as we can. We sincerely want to help the Canadian family farm succeed and grow. But yeah, you want to start at a younger age. You need to be healthy enough and to qualify for the insurance. Obviously, you can't just get it on anybody just because you want it. So, but you only need to be as healthy as the average person your age. So you don't need to be like Olympic athlete healthy or anything. So
Okay.
it's probably not as hard, and it's probably more boring than most people think when you break it all down.
Yeah. And
Yeah.
I always do this call out. I think it's natural human nature. I'm the same way, I'll admit it. When you don't understand something, it's scary, one. And also, you're talking about death, and you're talking about giving money for this invisible policy, just naturally as a human. And then also, it takes a fair amount of vulnerability, professionalism, getting outside of yourself. And I sometimes struggle with that, right? Because I like to think I'm a decently smart person. Just going to an insurance person for the average farmer and going, okay, I don't know I want help. I don't even know what to ask for. I'm scared you're going to rip me off. I'll just name all the things because these are the human emotions. Is that natural that people feel that way? And then speak to that a little bit.
Well, we deal with the biggest, most boring companies in Canada. Like Canada Life, Sun Life, Manulife, those ones, the world that everybody knows about, and they've been around for, like Canada Life's been around for 178 years or 179 years, something like that. But and we work with your lawyers and accountants and the family and your lenders, and it's a team effort. Like let's put a plan together that's actually going to make sense and come through to fruition and achieve what the goals are, and keep the farm alive and growing. But back to that case where the two parents and the three children, you could set all of that up and it basically cost out of pocket nothing or almost nothing. So imagine buying $50 million of insurance on your parents and 40 million on yourself and each of your siblings, and it basically costs nothing, tie up no operating capital or almost none. It's a completely different conversation than it writing big checks and never seeing them during your lifetime because it's just paying out when you're gone, right?
Okay.
So,
And that's through tax credits and stuff. The way
well,
it's
we're financing the premium. In most cases, 100% of the premium. If you write the check to the insurance company for $500,000 or whatever it may be, then you're getting a check back for $500,000 a week or 2 weeks later to put right back into operations to keep rolling. And as far as scale goes, we can take care of the biggest farms in Canada. I'll put it that way.
okay. Yeah. And I like to just name those human emotions, like the fear and the looking like you don't know what the heck you're talking about. Like that's yucky, isn't it?
Yeah.
Yeah, I'm fairly decently vulnerable, but even at that, sometimes I'm like, ooh, even here, I'm like, ooh, I don't want to ask. I'll look like an idiot. But these are
Oh no,
things we
absolutely.
need to do, right?
Yeah.
Yeah.
No, I
Okay.
totally understand. Yeah, it's an intangible. Well, basically you're buying a contract that
Yeah.
you can hold, and then you put it in your fire safe, and you probably most of the time forget about it. But another point of it being boring and everything, when everything's properly structured and communicated to the family and implemented, the non-farming kids calm way down because they know they've been considered and they know that some of it's coming their way. And the farming kids are way happier and more relaxed because they don't feel like they're working to make their siblings millionaires, and that their hard work and determination and blood, sweat, and tears is growing the farm for themselves and their next generation instead of how they feel doing 3/4 of the work for nothing, giving it away to the siblings, right? It calms everybody down, surprisingly.
I believe it. I've seen
They
it.
they they know what the future looks like. They know that they've all been considered. They know there's efficiency and that their professionals have all sat around and done absolutely the best planning that they could have with what's at the table. And it's kind of like get on with life and enjoy. Like you need to enjoy life too, instead of just being stressed about 30 years from now all the time.
Yeah. I've
Right.
seen the lack of communication, obviously the lack of planning, but the lack of communication, it just builds ghosts, right? Everybody starts worrying. They don't know what's going on. It disrupts harmony. And as much as I focus about the farm legacy, the farm assets, because that's my job here, I would say as a parent, hence why we're scared to mess it up. We have two legacies. We have the farm legacy and we have our children. And if we can do it right and protect both of those, like amazing, like beautiful, right?
Right. Right.
Yeah.
It's called family farm for a reason. It's
Yeah.
not, yeah.
Yeah. I love it. Oh, Darren. Okay. Those were some good final thoughts. Do you have anything else that you want to share as parting words with our audience, encouragement, whatever's on your
Yeah.
mind?
Anybody that thinks that I can help them in any way, give me a shout. I'm on the road lots. We can shoot the breeze. I'm in the truck a lot and talk about farming and how I can potentially give me a quick scenario, and I would give you uh, brief synopsis of what I would do if I were you. And if it sounds like it's something of value, then we go from there. If not, then there's a good chat about farming. So it's pretty down to earth.
Wonderful.
Yeah, I don't show up in a 3-piece suit and a Mercedes like some people out of the big cities. That doesn't fly. If one of them showed up to my ranch, I wouldn't want to talk to them either. So
Yeah, a little tone deaf when that happens, right? Yeah. When I always laugh, there's a big farm worth $30 million and the farmer's driving a old used Chevy pickup truck. Well, and they show up with a high-end luxury vehicle, a little tone deaf, but neither here nor there. Darren, this has been wonderful. Thank you for communicating with me, walking me through. These are the types of conversations, honestly, when I started this show 7 years ago, I've said it a little bit here and there on the show now. I kind of kept it a secret. Obviously, I have a media company. I want to put good information out for farmers. But the reason I started the Impact Farming Show was because of personal experience with lack of transition planning, what happened to the farm, what happened to the family. I'm like, for Pete's sake, and I'll be blunt and honest here. Our grandparents and those generations maybe get a pass because they didn't know what they didn't know. The information isn't as readily available. But the people sitting here watching this in our generation, shame on us if we don't do better. And that's why I started this show, is to have these conversations so that we can keep the family and the farm intact. Like, what a beautiful thing, right?
Right.
Darren, you are a gem. Thank you for joining me. This was a fun, informative conversation, honest conversation. Thank you.
Thank you so much. I appreciate your time. Have a great day.
You are very welcome. It was my pleasure having you on the show. You guys in the audience, if you like this episode, like it, share it, and get it out there. And if you want to get in touch with Darren, dig into this, his contact information will be on the show page as well. Thank you guys, and I'll see you on next week's episode. Bye-bye.
You've been listening to Impact Farming. For more great episodes and articles designed to help you manage and grow your farming operation, head on over to farmmarketer.com. Don't forget to sign up while you're there. We will see you on the next episode.